Hey everyone, and welcome. So, what if you could take a necessary expense, something you have to do anyway, like protecting your property, and turn it into a brilliant financial move? Well, today, we're diving into a really smart strategy that lets you use this year's tax planning to pay for all of next year's security. I know, it might sound a little too good to be true, but there's a specific and often overlooked IRS rule that makes this whole thing possible. So let's break down exactly how it works.
All right, first things first, let's talk about the problem we're trying to solve. For decades, inspecting property has meant one thing: climbing ladders, walking on roofs, and scribbling on a clipboard. And that method isn't just outdated, it's dangerously inefficient. And the cost of that danger? It is absolutely staggering. Just in 2020, U.S. businesses were on the hook for $24 billion in costs from ladder-related accidents. Just think about that for a second. A massive financial and human toll for what should be a completely routine task.
The difference here is really night and day. Old-school inspections aren't just a safety liability. They're also way slower, and the data you get is often incomplete or subjective. Drones, on the other hand, they completely change the game. They eliminate the physical risk, deliver results in a fraction of the time, and capture precise, comprehensive data you can actually use.
And you know, this quote just hits the nail on the head. It says it all, right? The absolute best way to handle a risk is to just get rid of it. By keeping your team safely on the ground, you remove the single biggest point of failure and liability from the entire inspection process. So solving that safety problem also unlocks a really powerful financial advantage. And this is where we get to uncover a fantastic year-end planning tool that honestly most businesses completely miss.
Okay, so let's meet the star of the show, the IRS 12-month rule. Now, let me break it down in plain English. This rule lets you prepay for a service, like a full year of property inspections, and deduct the entire cost on this year's taxes, even though you get the service next year. It's actually designed to make accounting for these kinds of routine costs way simpler for businesses. So, how do you actually put this rule into action? Let's connect this powerful tax advantage to a clear, step-by-step strategy for protecting your property. It's actually a super straightforward three-step process. Step 1, you secure a 12-month retainer for drone inspection services, and you make that payment before December 31st. Step 2, you get all the benefits of those inspections throughout the next year. And step 3, you claim the full prepayment as a deduction when you file this year's taxes. Simple as that. So here's the bottom line. By accelerating that deduction, you lower your tax bill for this year. And that tax saving is real cash back in your pocket, which basically means it subsidizes the cost of protecting your most valuable assets. Pretty cool, right? And look, before you start thinking this is some weird, sketchy tax loophole, it's really not. Businesses do this kind of thing all the time with other professional services. Prepaying for property insurance or legal retainers or even software contracts. They all fall under the same well-established IRS rule. A drone inspection retainer fits right in as a standard business practice. That immediate tax saving is fantastic, right? But believe it or not, that's just the tip of the iceberg. The real power of this strategy comes from the data you collect, which generates a massive return on investment, or ROI. Just think about this for a second. Waiting for something to break, what we call reactive maintenance, costs businesses 25 to 30% more than taking a proactive, preventive approach. All those emergency callouts, the rush fees, the overtime, it all adds up incredibly fast. So when you commit to a preventative strategy, one that's funded by your tax savings, the ROI can be enormous. We're talking up to 400%. No, that is not a typo. You're literally shifting from high-cost crisis management to smart, efficient asset preservation. So you're probably asking, where in the world does a number like that come from? Well, it's a combination of a few really powerful factors. First, you extend the life of major assets, like your roof, by up to 40%. Second, you cut your overall operating expenses. And third, you can directly lower your annual insurance premiums by showing you're actively managing risk. Let's dig a little deeper on that insurance piece, because this is a big one. When you can give your insurance carrier regular, high-quality inspection data, you're proving you're a lower risk. This documentation can lead to lower premiums, for sure. But just as important, it helps you avoid the huge loss costs that come with properties in poor condition and makes any future claims process so much faster. And don't just take my word for it. This is a perfect example of what it looks like in the real world. Having objective, time-stamped photos from before and after an event like a big storm just removes all the guesswork. It's irrefutable proof that streamlines the entire claims process and gets you back to business faster.
Okay, so let's bring all these threads together. When you combine the tax benefit with the operational savings and the insurance savings, this whole thing stops being a simple maintenance plan and becomes a massive strategic advantage for your business.
So here it is. This is your new playbook, your new game plan. You pull a tax deduction into this year, you use those savings to fund a program that delivers a huge ROI. You make your assets last longer, you slash your insurance costs, and maybe most importantly, you take control of the story your property tells to underwriters.
And that right there is the most important takeaway. We are completely reframing property inspection. It is no longer just another line item expense. When you do it this way, it becomes a sophisticated financial instrument that protects your capital and boosts your bottom line.
So I'll just leave you with this question to think about. Your property is one of your most critical assets. In an era of rising costs and amazing new technology, are you absolutely sure you're using your smartest, most powerful tools to protect it?